Okay, real estate space has been buzzing, and in particular, DB Realty has been a marked outperformer. Let's connect with the CFO now, Mr. N.M. Gattu. Mr. Gattu, good afternoon, and thank you for joining us. Now, in principle, you've received the CRZ approvals for 2 projects. Can you share more details with us? How will life change now that you've got in principle approval for 2 new CRZ projects?
Hi, we've got approvals for 2 of our projects. One is Bandra West Home Metal project, and the second is our Marine Lines project. These 2 were in CRZ earlier. These were substantial assets, adding substantial top line and the bottom line to the group going forward. And these assets were there with the group for a few years, but there was this line of direction which was missing. If you look at from value point of view, there are 4 broad dimensions under which the unlocking of value happens in the real estate. The first is the line of direction. Of course, the owning of the asset is always a fact, which was there. The line of direction was given in December by virtue of the High Court order. Then now the virtual certainty has come with the order of MCZMA being passed. So now the next level would be the moving to the certainty, which is when we will get the IOD and CC, and reality, which when we start getting the cash flows and we start selling the project from the accounting point of view, revenue lines, as well as the cash flow point of view for the group.
Okay, let's talk about one of your projects, the Bandra project first. How much capital has been invested there, and what are the kind of returns that you expect from this one?
The equity that has gone into the project till now, there is no debt that we have raised for Bandra West project. DB Realty, through its wholly owned subsidiary, is a 50% partner in the consortium which is developing this Bandra West project. Right now, with the approvals in place and the project not being in CRZ and the benefits the project will get from the fungible FSI of 35% over the FSI, so the development potential out there is about 12 lakhs.
What kind of revenue recognition policy are you likely to follow with both these projects, the Bandra and the Marine Drive project?
Both these projects we adopt the prevailing revenue recognition policies, and also as we have declared in our website, which is that once we touch the 30% mark, then we will start recognizing the revenue. So if at that point in time, assuming that we have sold 30% of the area, so 9% would be the starting recognition of the revenue. If it is 20% sold at that point in time, so 6% of the overall would be the top line revenue.
Okay. What about the Marine Drive project, and when are you looking at completion there?
Marine Line project is also similar, so it has come to the virtual certainty stage. So now we are proceeding to submit the plans to the BMC, because this MCZMA order is addressed to BMC as well. So now BMC will entertain our plans, and once the IOD and CC are received, so then we will proceed with sales and first the cash flows and revenue recognition thereafter.
Current land bank is centered around Mumbai, because primarily DB Realty is more like a Mumbai based real estate builder.
Yes, that's right.
So my question is, how much of your business is going to come from Mumbai, and how much of your business is coming from Mumbai?
See, we have about 5 projects currently that would go live in the next 1 year, and about another 5 projects under pipeline on the suburbs. So there would be about 10 projects that would be live in the next 12 to 18 months.
Okay, and break it down in terms of earnings and revenue potential then for FY16. How much of these projects, how much monetization is likely to happen in FY16? So what numbers are you going to be looking at for sales and profit targets for the year?
See, the cash flow point of view would be about 500 to 1000 crores we expect to receive from these projects in FY 15-16. The percentage completion method basis, we have to wait till September at least to have the reasonable expectation on the percentage completion method, and the revenue recognition is expected in Q4 of 15-16, else it will definitely in 16-17.
There is a feeling from the new BJP government that things would be improved dramatically for Mumbai's landscape, whether it's TDR or making Mumbai the financial hub pretty much on lines of Singapore and Hong Kong. If that had to happen, what could happen to real estate prices in Mumbai? Because in Mumbai, real estate prices are already escalated.
Well, the pricing is again the demand supply factor. It is not somebody who's going to determine the pricing as such. But one factor which also determines the pricing of Bombay is the demand and supply factor versus the supply and versus the demand. The land bank is very limited in South Bombay per se, and with all the premiums getting added up, earlier there were no premiums per se in South Bombay project if one were to go about, but today you have staircase lift lobby premium, fungible FSI premium, PPL premium, so multiple premiums. All these premiums have to be paid upfront, and this has to be kind of through equity funding. So the cost of equity is anywhere between 20 to 30% for real estate sector. So looking at the upfront investment and the return expectations on the capital, so loaded on to the end unit value, so the prices tend to move up.
Okay, Mr. Kattu, we leave it at that. Thanks very much for joining us and giving us those insights to your growth prospects and the business outlook thereof. Appreciate your time. That's DB Realty. As we were speaking to the management and they were addressing how they're going to be looking at monetizing each of their projects, the stock has risen about 3%, $92 at last count. We'll take a break, but when we come back, get you some strategies stepping into 1 o'clock.